If you're sitting on a 3% rate, but you need to move for family or for a job, or you just are tired of the area, this is the year to think about it. Locked-in effect starts to break down. Inventory is rising and life events are starting to win out. Life events such as more kiddos, needing to go to different schools, divorce, marriage, these types of things are starting to change people's perspective. Just had a conversation with a client today that is actually selling a property financed at 3%, and another property recently where a client had it set up that they could buy the next home and achieve close to the payment that they had from that rate back during COVID. One thing that's changed for a lot of people from them is, were you making the same money in COVID as you're making now? And for a lot of people, the answer is no, because of wage inflation over the last 5 to 7 years. It is something to think about. And then it becomes, how important is it for you to solve for X? X might be the commute. The commute might be 40 minutes each way, twice a day, 5 times a week. The commute might be, as I had one client who worked in aviation, and that was going to be an hour each way, 5 days a week, plus gas prices, plus wear and tear on the vehicle, etc. And it became, how much are you willing to spend more to absolve for that? Now, you could always look at converting the property to a rental. First question to ask yourself there is, do I want to be a landlord? If the clear answer is no, then you look to sell the property. If you're not sure about that, I have videos about these types of topics you can certainly check out on the channel. From there, this is just meant to give you some no BS talk about this big decision. And guys, what you got to understand is that the easing bottleneck isn't going to mean a deluge of homes coming on the market. Yes, there are more homes on the market. Inventory is rising, not at a rapid clip, but yes, there is more inventory. And with less buyers, then if you are thinking to become one of those buyers, that means you can think about the aspect of negotiating through creative financing. What might that be? Well, that might be a temporary buy down, a 3-2-1 buy down, where my note rate is 6.5, but through seller concessions, I start at 3.5 for 12 months, then 4.5, 5.5, land at 6.5. So I can ease into that higher payment. A permanent buy down is a way to take seller paid closing costs and permanently buy down the rate. Right now, there's the debate. Should you buy down the rate? Should you not? Should you pay points? Should you not? I have a video for that. Check that out, because that is something to think about as we go into a season with the change of the chair of the Federal Reserve and what's going to happen with their key target rate, and what will that mean for mortgage rates into the future. I think it's still tied in with inflation, but we'll certainly have to see. We've structured deals also for those who are veterans and those using FHA loans, where adjustables at rates that are substantially lower than 30-year fixed. And they have protection on those so that when it does adjust, it's really not a payment shock. In fact, it could even be lower if you take the savings and reapply it to the mortgage. There's a video for that as well. Out there as well, of course, assumable mortgages. So you certainly could hunt and search for homes that are advertising you could assume the loan of the seller, which could mean that you're still able to achieve a rate in the 3s. Bear in mind, though, with most assumptions, you're not coming to closing with no money. The seller can only get the loan assumed, and if the value is higher than the loan. But if you look at loans of homes that closed in the last couple of years, if that's advertised as an assumption, you may not need to bring much of anything to closing. Certainly keep this in mind. And if you have an FHA or a VA, you certainly can market your home as assumable to potentially attract more buyers, speed up the sale, which with less buyers in the market, that can be beneficial and possibly command a premium. With that, you can leverage wage growth. What do I mean there? Using affordability math, wage growth outpacing home price increases. To say, Ray, that is not the case, okay? But I'm talking about Denver right now. Okay, so in Denver, statewide salary growth is projected at 3.6%. Yeah, that's about in line with inflation, but depends on which marker of inflation you're watching. But keep in mind, Denver's minimum wage sitting at $19.29 an hour. Statewide personal income is projected to go up 4.5%, and inflation currently sitting below that 3.6. That to be said, the thing to think about there is what money will you be making now? What money will you be making into the future? Does it make sense to make the move? And then over time, will you be happier and not feel trapped by that interest rate? We had a client recently who needed to do a refinance. And in his situation, he's really locked into this VA loan in this rate that's sub 3%, but his consumer debts are costing him substantially more per month. As a result, letting go of that rate would actually save him over $1,000 a month of total income outlay for bills. Yes, so at times refinancing could make sense too, as well, if you don't plan to sell your home. Okay, so all that to be said, Denver has a balanced market. It is shifting a little bit towards buyer favored, but it still has a fairly strong job market with family friendly suburbs. Definitely don't overlook the closing costs, get pre-approved early, and do not be emotionally attached to an interest rate. If you can raise your hand and say, I've had my loan for 30 years and paid off my house and never refinanced. If you have a home that you paid off in full 2-0 and it did not get paid off by the buyer who bought it from you, comment below. Hope this is helpful for you. Again, just some transparent information for you to think about. Should I let go of that low rate and move on with my life? Again, I think the key question becomes, how much am I willing to pay to solve for that situation? If you like this type of content, please subscribe, share with friends in these situations. If I can be of any help, you know how to find me. Have a great day.